All right, so this will be the market outlook for the week of September 15th. So, a little housekeeping before we get into the outlook. I'm going to be making these outlooks Mondays and Wednesdays until I see, otherwise, to give us like the beginning of the week outlook of, hey, what are we doing? And usually on Wednesdays, we get some sort of price action that reverses or some sort of volatility based on news, even though it's not something we use in the system. But just to give us like an intraday or interday outlook to see like, hey, what's happened over the past couple days in the week and then moving forward. So I'll give us about a frequency of 2 times a week doing these market outlooks and then carry on from there. And if we can reduce it back to just, 1 time a week on Mondays, and then if you guys feel comfortable with that, we can do that. But for right now, I'll give us, 2 market outlooks, one Monday, one Wednesday. The other thing is, as you can see, I've condensed my watch list or our watch list essentially to 3 pairs and then tab them in the CFD and the futures because that's what we trade. So GU, UJ, and NASDAQ 100, and then the futures is just GEU and or 6B1 and NQ1. So primarily I'm going to do the markups from the CFD charts, but if I need to, I'll do it from the futures as well. But the price action and the chart markups are going to be relatively the same. It's just different pricing. All right, so let's get into it. For GU, on the daily, we always start from the daily. This is our macro perspective time frame that we start off, and then the other time frames that we have on the macro perspective are actually going to be the daily, the 4 hour, and I've added the 3 hour and the 2 hour just to give us a little bit more wiggle room because for some time things get a little hairy on looking just the daily and the 4 hour recently. So I'm giving us a little bit more time frames to look at or represent the data. So for the macro perspective and for these market outlooks, I'm only going to be looking at the macro perspective. So we're not going to be looking at plays. I'm not going to go into like breakdowns of trades and stuff. I'm just going to give the overall, here's the spotter, and then you guys shoot. Right, so I'm just going to show you like what the market looks like from my perspective, from the Ace of Trades systems perspective, and then we go from there and like, hey, do you see these points of interest or area of interest, and go on from there. All right. So I'm just going to go ahead and start clean. I'm going to clear these little annotations that we have on the chart. Um, so what we have from the macro perspective is we've established that we're in a bullish range. We have the price leg from this low all the way up to this high. We've completely mitigated that price leg, but because we're in a range, um, from the market phase, we've essentially established that, hey, we're doing a lot of consolidation around this area. And so we've essentially just been mitigating areas of interest, inefficiency zones inside of this range for the past like 4 or 5 months. And we just recently mitigated one here on the macro perspective, which was that there. And I believe it resolved down into a 4 hour price gap, if I'm not mistaken. Yeah. So it actually ended up being from here to here and it tapped 50% perfectly. Neither here nor there, but that's what sparked the price action that we see moving towards the previous liquidity point inside of here, which we actually mitigated today. So now moving forward, we're in the premium side of the range, and we've already annotated from previous videos this area of interest here, which is a macro price gap. So we're looking at this area of interest as our next potential opportunity for trades. And so once again, we're always looking, if we're looking for sells, 50% to 100% is the area that we want to look at. And also want to take note that if this structure still holds, we may get a mitigation and continuation higher outside of the range. This may be the move that, sparks us or that gives us enough oomph to get outside of the range. If not, we're still going to look at this area of interest for an opportunity to take a trade or take trades, but want to take note of how the structure is holding and how the markets are moving currently as we've broken structure of this liquidity point here. All right, so that's GU. So now we're going to get into UJ. UJ, we are still dancing around on the discount side of the range. We've had a lot of news that has essentially done nothing. I mean, we had a response from 50% of this range, of this bearish range here that we're in on the macro perspective, and that sparked us to move down into deeper into this price leg that was generated here. So, namely, all we did was expedite the price action into filling this price leg. So this all, if we start from here, this low here to this high, all we did was expedite the pullback, and now we've got a ton of consolidation. We've really been consolidating for essentially a month now inside of this price leg, and so we're still waiting to see what's going to happen. Um, but something I want to note here is that I did take a trade off of, if you remember that video, couple videos ago in other channels, I took a trade off of uh, a price gap and a sponsored candle here. This ultimately ended up failing, and we went over the logic and why we see that price is going to pull back lower into the previous price leg, which actually extends from this low here to this high here, and then we, notated opportunities there. So, which are all derived from this price gap here. So we're seeing this, or I'm seeing this currently as still that. I don't see any bullish, price action that's holding. I think we're still consolidating. And to me, the logic behind this is if we're consolidating, then there's something in the area that needs to be mitigated, in which I identified in this previous price leg a area of interest that I wanted to look at. So UJ, there's a couple scenarios that can happen. Either we just forego all of that and we continue the price action into the premium, or the other scenario is we begin breaking these lows and pulling back into the previous price leg and mitigating that area of interest, and then we'll look for the price action that happens here. But currently, for the market outlook on UJ right now, is I'm still looking for the lows to be broken, still holding that bullish bias, but a deeper pullback into the previous price leg to give us the response that we want to push us higher. Then on the NASDAQ, we have broken all-time highs once again. Talked about that in a previous video, in which all of this is the previous high was here. We got the pullback that mitigated this the mitigated a 2-hour sponsored candle inside of here that led to the break of the all-time high. So now we are essentially just in the impulse phase of this new price leg, which starts from the insertion after the mitigation of this 2-hour sponsored candle. And now we're just essentially waiting for price to begin the pullback phase, which is going to be the creation of that inflection point. We know the actions that we need in order to establish that we are in the pullback phase, but as of right now, we just look for opportunities to continue pushing higher, or we just simply sit on our hands and wait for that pullback to begin and catch trades moving down, or we just wait for the pullback and then start looking at opportunities and seeing where that inefficiency is inside of that price leg. So currently, we're still following bullish trend. The state of the market is a bullish run or a bullish trend, and we're in the process of generating the next price leg higher. Everyone still thinks that the market is going to drop, but I'm going to wait for that to happen in order for us to establish that, that the market is going to drop, which means that we would literally have a breaker structure at that price like here, because this is our new structural point at this low. So in order for us to establish that the market is going to drop, we would literally need to pull back all the way and break structure at this structural point. If not, we're going to continue pushing higher. So we'll have a low, a high, wherever that is, a pullback, and continuing the trend. And so if we have a new low created that generates a new high, which is one of the first scenarios, is a scenario, then that'll shift the structural point from here up to here, which makes it easier to decipher if we're going to begin bearish price action. If not, we have a long way to go for us to determine that price will begin that bearish price action or, fall. All right. And so that's it for the market outlook. If you have any questions, please let me know. Peace.